Today we are going to talk about the top 5 mistakes that a beginner makes in the stock market that costs him his entire career. We'll talk about different problems that a stock market beginner faces and how he can dodge them. Avoiding these mistakes will help you succeed in your financial journey. So without any further delay, let's begin. In the stock market, it's really important that you hear your inner voice and instincts. When you research something and you really believe in a company, you listen to yourself first and foremost on that particular investment. If you get influence from the media like CNBC and Bloomberg and other media houses, you might end up making a bad choice that would give you a ton of regret. You need to understand the fact that you and solely you would be responsible for the results. No media source or broker is going to help you overcome your losses and failures. So it's better to be decisive based on the ground of your reasonings. Great investors make great gains on stocks all because they listen to themselves first and didn't listen to others. Sometimes analysts are so far wrong with the stock. They'll give a thumbs up for the buy and that particular stock will just be going down and down, and then they'll wait to bring up the celebration until that stock already bottomed out, and at that point it's already going back higher. So first and foremost, trust yourself. If you want to listen to others, that's completely fine, but don't listen them so much that they are the one influencing your decision whether you buy or sell a stock. A lot of beginners and some more advanced investors within the stock exchange often gets emotionally tied to a stock. They fall soft on their upon stock so much that if someone said something bad about it, they get so offended and they want remove that person from their lives. That person becomes a devil and whatnot. This might seem funnier now, but it happens for real. Understand this. A stock is a money sign, nothing more, nothing less. It is a way for you to create money, so do not get emotionally tied to a stock, because at some point of time you're going to wish to probably sell that stock and get rid of it, as we cannot see what's gonna happen in future, and your emotions would make you think wrongly. It might say that this company can be such an excellent company that 50 years from now it's worth 100 times what you invested or whatever. Remember, investing decisions are to be taken with a sheer focus and sensible reasoning. Anything based on emotions will bring in miseries. Most of the times you're going to require to induce out of that stock to get in something else. So there's no point in getting emotionally attached to a stock. Many rookie investors get this wrong and end up ruining their portfolios. Fluctuations in price of a stock should not bother you in short term, assuming you are here for a long game. Short term fluctuations is the way the market works. Until and unless you are a day trader or a short term trader, this thing should not bother you. But again, if you are in for that, then you must be aware of the risks in the gambling. Any good investors know what he is doing and trust his decisions. You need to prepare for the exams before appearing for it. Once you have submitted the answer sheets, worrying is useless. The same goes in here. All the hard work and reasonings are to be made before investing in a company. After you invest in one, you need to trust in your process and play for a long run. If I invest in a stock and it goes up by 10%, that's great, okay. Who cares? If it goes down by 20%, it doesn't bother me. It actually doesn't matter in the short term. All that really matters is in the long term. Short-term fluctuations happen. Don't pay deep attention to them. Other than that, if it goes down a lot and you still believe in that company, maybe you want to buy some more stocks. This is what great investors do when a stock goes down. Although if the stock keeps on falling down and there is some serious problem in their internal management and fundamentals, I would advise you to better think twice whether to hold the stock or not. So many folks just get forced into the narrow space within the stock market, and to be honest, it's on no account easy to make a lot of cash within the stock market. Maybe as the exchange goes up, if you merely want to urge 8% a year on the common, you will just throw money in a very market fund account or a general investment firm. Then you will just benefit or get bad. Because the stock market does a chair, that's pretty easy. Yeah, but if you would like to try and do to induce 20% a year, 30%, 40% or those forms of high gains, then you truly should understand its real exertion. It takes plenty of work. You have to be compelled to be willing to read through long reports. You had wished to search out recent news on these companies. You need to examine all the financials and dig deeper. You had preferred to hunt down about the CEO, CFO, seeing how reliable they are, and that I suppose is the toughest part of the sport. It's completely okay if you just found that on one company, but the particular fact is you had must be a 50 or 100 plus companies before you finally find an extremely good one that you just want to take a position in. Now some might get kicked out right off the bat, but it is the reality. Your visiting still looked super deep into lots of companies, then know you are doing not even what to require a foothold during this one. Overall, you will need to be persistent and good with the numbers. Coming towards the last tip of today's video, which will prove to be one of the crucial points to remember throughout your investing career. Stay away from these lines like stay miles and miles away from anything that sounds like this time it's different. Nothing for sure is controllable in the stock market, and no one can give you accurate future predictions for sure. But one thing that the greatest investors know and can give a verdict on is the fact that there's nothing like it's different this time. It might seem to be one in a short span, but every time it ends up with the same very result, and that is huge loss. Market works on emotions and speculations when it comes to the short term, but it always tends to show the result based on companies' hard work and success in the long run. So trust the companies you invested in and hold them in the long run. They will prove to be profitable. Anything sketchy, spammy or too good to be true stocks that keeps on grabbing your attention every now and then should be avoided. Remember, next time you see a hot, trending, flashy stock, take a step back and read about their internal factors, their previous balance sheets, and things might get pretty clear to you, and your hard-earned money could be saved. Bottom line, stick with the basics and avoid everything like this time is different, as it usually isn't. This is it for today's video. I'm planning to upload more content based on personal finance interest. If that's something you bother about, consider subscribing us. I'll meet you in some other valuable video. Till then, keep hustling.